Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here with you one more time, once again, to share with you the key, most important events for the financial markets at the end of the week of Friday 16th of February. So you're probably gonna see this video by the beginning of the next week. So this is your recap of what happened the previous week on the market and why you should keep an eye on certain assets this week, this starting week. Let's start with few data. We're gonna take a look the whole week. Friday, actually today, by the time I'm recording this video, the evening of Friday 16th of February, we have seen on Wednesday we have seen inflation rates from the United States rising, which it was a kind of surprise for the market. After that, I mentioned to you on our daily reports the words from Janet Yellen, super optimistic words from Janet Yellen. And by the end of the day today, I'm gonna share with you the latest data regarding of PPI, the prices on production index, which is a kind of, once again, I explained this in the previous videos because it start to be the PPI start to be a really important indicator of macroeconomics, because the last few ones has been negative. The one from today, it was actually positive and above the predictions, the expectations, which means like the PPI, let's say, is a kind of boost on inflation. If that index is rising, it means like the inflation potentially could rise in the future. If that index is dropping, it means the inflation potentially could drop in the future. And actually, what I was reminding you in the previous videos, it was the PPI negative actually could bring us a new topic on the table, which could be deflationary risk on United States, on Germany, and even on China. China has been suffering this negative index for the last 10 months, since 2023. Because of that, we have been paying a lot of attention on this index. Anyways, let's go point by point. This last week has been holidays for the golden week of New Year, China's New Year. So South Korea, China, all this market has been closed. Still, I was mentioned to you, Japan was open, and I was mentioned to you few comments on the dollar-Japanese pair, because it's showing us very interesting levels, not seen since 1987, 1990, July 1987, April 1990. We are getting close to those numbers, to those levels, to those price levels, and there is a rumor that still, regardless the weakness of the GDP of Japan recently, still Bank of Japan probably by April could still increase the interest rate. And if that happens, it means that the dollar-yen could twist aggressively, because it's almost in a top record resistance for the last 40-50 years. So amazing. We need to take a look on those numbers to see what could be the opportunities on that market. And remember, this is not a video to give you advice of any kind. I'm not here to tell you what to do with your money. I'm just here to share with you the key, most important questions, topics regarding the financial market, touching absolutely all. Equity, fixed income, currencies, commodities, and even cryptos, because we're gonna take a look also on Bitcoin. Well, we got inflation rate from United Kingdom on Wednesday. As you can see, it was actually dropping, which is good, positive. It was bringing certain concerns about the potential recession in United Kingdom, but still the waves, the hourly average income from United Kingdom families, it was rising above the expectation the previous day. It's not here because it's not considered a high volatility indicator, but it was a kind of clue to understand what's the situation of UK economy at the moment. Pound, I can show you on the charts, pound was rising eventually early on the week, but it was dropping back again to the main levels. You will see now. If we take a look on long term, super long term, we actually can see that the market is boom dropping, you see. But still, if you see in close terms during the week, it was actually making a kind of positive reaction, rising little bit few times, but as you can see, it's almost like impossible fight against this massive resistance. It's losing right now the moving average of 200 periods, so still it's another very interesting pair to keep in short. And again, it's telling us that in this case, dollar is getting stronger and stronger. against other currencies, which makes sense because if we take a look now to the calendar and we see that inflation rate in the United States was rising, you can see here that actually the monthly one, it was 0.4%, above the expectation of 0.3%, and the annual one is ending at the moment at 3.1%, above the expectation of 2.9%. So inflation in the United States is actually rising, not disappearing. Saying that, it means like Federal Reserve probably is now taking in consideration, well, if the inflation is not dropping to 2%, how we gonna cut interest rates? And actually, the last comments you can find on social networks, well, not social networks, the last comments made by Federal Reserve officials, you can read here, Fed's Baltic, my outlook to start lowering rates in the summertime. So now Baltic is saying that he believes, he hopes the interest rates start to get cut in summer. Do you remember a month and a half ago when they were mentioned that the interest rate cuts will come probably by March? That was the main speculation of the market. That's what it caused in SP 500. This massive movement from December. Let's take a look. We were even lower. We were here. End of November, when Jerome Powell was talking about the interest rate cuts, the whole market was celebrating, rising, and rising. Now, it's end up that actually it wasn't planning to be on March. Baltic is mentioned that maybe could be by summer. Also, if you keep reading, one of the last comments he did, it was, I still expect 2 rate cuts in 2024. Hold on a second, 2 rate cuts? I thought it was 4 rate cuts. That was the main idea. That was the first idea. Initially, the market was expecting 4 rate cuts of quarter point, 25 basic points. What happens with that? Why is not already or still on the table, right? With positive data, I could support 3 cuts this year. Well, if the numbers are good, maybe 3. 2, maybe 3. That's what Baltic is saying. Baltic is the Federal Reserve President from Atlanta, from Fed of Atlanta. So it's interesting, very interesting to follow these topics. What else we need to mention? We talk about the inflation rate on Tuesday, which was when the market was twisting. You see this drop here? This massive drop was caused by the inflation rate. By the hike on the inflation rate was causing that drop on the market, but it was recovered really fast. I think I mentioned to you on Wednesday report. Let me take a look on our market report. Wednesday was 14. So let's go to the report of 14. And I think here I mentioned to you the words from Janet Yellen. Where it is? Janet Yellen, where you are? Maybe it wasn't on this one. Maybe it was on Tuesday when I mentioned this, or maybe it was even on Thursday. It was interesting. Let's take a look on Thursday, because Janet Yellen was actually saying, it was twisting completely the picture and telling us that actually it was so positive. You see, Yellen's word brought optimism to US stock markets yesterday. Quote, this morning CPI report showed that in January, the headline consumer price index fell to 3.1%. She's not telling to you, well, actually, we were expecting to a drop to 2.9%, and unfortunately, it was 3.1%. No, she's telling to you, the headline consumer price index fell to 3.1%. That's 6% points below its peak in June of 2022, she say. So she's mainly saying, good news. Anyways, we're dropping from the top records from 40 years, which it was summer 2022, of course. At the same time, she say, the recession that many forecasters predict will need to see inflation come down hasn't materialized, which is also true. She's saying, well, why we are scared about the situation, why we are scared about the inflation rate higher than expected, if actually at the end of the day we are not facing any recession in the United States. What was by 2023, that was the main concerns the market was getting, that by the end of 2023 probably United States will face in a recession. By the middle of 2023 they start to change the words. They start to talk about slow what was slow landing, no, soft landing, that was the word, a soft landing. And after all, there is no apparently any landing. Why? Because actually the US economy is still flying. As you can see here, the growth rate of United States on Q3 was 3.3%. Amazing. Even the previous one was 4.9%. So apparently the economy of the United States is going so well. Even the unemployment rate drops to 3.7 from 3.8 for 3.8. Yeah, exactly. So as you can see, they got the point. They actually saying like, what's the problem here? If actually there is no any issue with this, actually we are doing well in U.S. economy. Why are you concerned about inflation? Very interesting point, and it's a fair point. But the problem is the market was discounted interest rate cuts almost immediately in December, and it's not going to happen so far. Now let's take a look. All prices. Nasdaq 100 is dropping, but it still recovers somehow the prices. SP 500 is trying also to recover the main prices. As you can see, the pattern is very similar, but in the case of Nasdaq, for the first time in the last 2-3 years, Nasdaq is not following the SP 500 in this sense. Russell 2000 actually is getting so volatile. You can see it's full of gaps. The price is not actually moving harmonically. Is making many gaps there, which prove or show us the volatility that this the small and middle caps experience in stocks experience in United States. Going to Europe, very interesting too, because DAX 40 is breaking up the top records of 17,000 points. It's a new maximum, but as you can see here, first of all, we got a kind of pattern that invites us to believe that maybe it's actually a bullish movement here. If this neckline is getting broken clearly, right? But if you take a look on long term, once again, we're going to see that, surprise, surprise, the market is telling us a different story. Take a look on this chart and you will see. Can you see this chart? This is from 2009 and it's showing us clearly that the market is about to twist down soon. So either it's in 16,000 points when the market is facing down, or either is less than 1,000 points above. And the correction, that's the thing. If the market is twisting down, the correction gonna if it's twisting down, is gonna take like 3,000 points, 4,000 points down. So the profit risk reward in this trade, if you are long, is actually not so good. It's actually negative. It's below 1. Okay, so it's not the best trade for shorters. Obviously, it starts to be super attractive, but for those ones who are long, that's not the case. Talking about that, dollar yen, this is the one I was mentioned earlier. Look, the situation of the price right now, we are very close to the maximums of July 1987 and the maximum of April 1990, and obviously the maximums done on 2022. Yeah, when the dollar was rising massively, and again on October 2023, we are almost there. We are almost on those maximums, and once the price reached those top records, probably, even if with the rumor, considering the rumor of Bank of Japan rising interest rates, these things could change dramatically. We could see a massive correction in this pair. Let's keep an eye on those ones. What else? I think we mentioned all. Dollar index is still strong. Let's take a look closer. You see, it's still strong. This pattern was announced in the previous videos. Remember, we announced this pattern before it was activated by the end of 2023. Boom! Look what happens. We were right. Yes, thank you. And still seems to be strong and rising. Even those numbers today of PPI push it for a while, the dollar up again, and we will see what happens. But still seems to be like not easy for the dollar rise, but it's rising. That's the thing. And if you take a look now from dollar to gold, because gold is actually the counterpart of the dollar, you will see that it's recovering certain levels, but it was dropping below 2020 dollars per ounce, which is the chart I was selling to you again in long term, revealing us what is the range of the gold. You see, this is right now the chart, and I was mentioned to you in previous videos that if the gold is losing 20, 30 or 20, $20 per ounce, is dropping back again inside of this range, which is going from 2,000 to $1,650 per ounce. Very interesting too, the market of gold. Pay attention to that. Oil is rising, surprisingly, it's rising. If we take a look closely, our main concern was oil dropping or breaking out those levels, 72 to 68, breaking out down those levels and start to drop to again to bottoms that we have seen, like $16 per barrel here during the 2020, the crisis on that summer. Going to certain patterns like these ones, as you can see here. If it's dropping and breaking up this area, it will be again that breakout. But if you take a look closer, let me even go even closer than this. Let's go to 1 hour. You will see that actually it seems to be making a kind of shoulder, head, shoulder inverted right here, right? I don't know if you can see. Let's draw it. 1, 2, 3, breakout, and boom. And here we go up again. How this could be happens? I believe the only reasons maybe because the countries who produce oil were trying to rise the price up and they couldn't. So I believe the geopolitical risk is the only thing that could actually move the oil price up aggressively. And the last news I have been checking are actually talking about how the this political oppositor died in prison in Russia, and actually the government of United States, President of United States Biden was warning about the consequences if this Alexei Navalny dies. The President of United States say, I made it clear to him that I believe the consequences of that will be devastating for Russia. So let's see, it's another factor of risk after the satellites with nuclear weapons to United States and so on. It seems to be the media try to give us excuses to rise again another conflict. That's it. Bitcoin, last market to check, it was doing amazing. Take a look. Now it seems to be a kind of pattern showing us the price is getting weaker, but still is in a very strong long-term pattern. If we take a look further, it was amazing. And again, it's something we mentioned in previous videos, this pattern activating the movement. And I told you the movement, the target, the goal, it was 48,000, 49,000. I say, if the price is going to the target, if the price is achieving the target, probably it's not going to end there. It's going to go to the mainly target, the psychological barrier of $50,000 per Bitcoin. I think that's all. I hope you enjoyed this video. I'm just trying to give you a quick update on all. If you go into details, please go to our blog on ATFX Connect. You just click on blog, market snacks, and you're gonna get the whole every daily update I'm uploading here, which is an explanation of what happens in the last 24 hours. And also you can follow us in X at ATFX Connect to see the charts I'm sharing with you and the comments. And if you got any suggestions, please let me know. Let me see what is my there is my contact, so you can contact me through that email if you want to request access to the newsletter, which is completely free, or you want to suggest any video, any topic to discuss on videos, podcasts, and so on. You want to participate in any kind of video, you're welcome. More than welcome to come and participate with us. And if you enjoy this content and you like it, please thumb up and subscribe. Thank you for watching. Bye bye.